This is Marek Fuchs here today to talk to you about what happened with healthcare stocks in the stock market at large last week, and more importantly, talk to you about what might be happening in the coming week. Really try to puzzle it out. Now, last week, the uncertainty of the United States presidential election was finally mercifully lifted, and to celebrate, the market lost 2.4% on Wednesday. Now, whether the market hates Democrats, it fell 5% the day after the last time Obama was elected, so comparatively, this time was a veritable love affair, or was merely taking the occasion of the end of that big event to realize that we're standing on the lip of the so-called fiscal cliff. Only the shadow knows. What we do know is this. Number one, the market is in fixation mode. In other words, it is fixating on big events, assuming or hypothesizing each and every time these events come and go, that these events will hold all the answers for what will happen in the future. And that's never so. It's really symptomatic of a nervous market, and a market that's kind of running just to stay in place. Not a great sign, at least in the short to midterm. The other thing that you need to realize on the occasion of a presidential election is no matter what your personal preferences politically, and no matter what the histrionics of the market in the wake or the immediate wake of the election, here's what we know, and we know it well. By nearly all long-term measures, the market performs about the same under Democrats as it does Republicans. There's some evidence, depending on how you look at it, big companies do slightly better under Republicans, smaller companies Democrats, but it is in the end a wash. Speaking of a wash, Monday is going to be half of one. It's one of these half-hearted, half-baked holidays when the bond market is closed but the stock market is open. Expect sort of a truncated week though. It's going to be light trading on Monday as a lot of traders take the day off. So keep that in mind. But on the week in general, we're going to have retail sales. We're going to have a whole host of earnings, which we'll get to, and we are going to have inflation numbers, consumer price numbers, and producer price numbers. And keep your eyeball firmly affixed to these, both this month and in coming months. Here's why. Now, the Obama administration and the Fed have sunk enough money, as we've been speaking about, into the economy to lift the Titanic. It hasn't really gotten the economy moving or moving much. But the downside, obviously, when you're just printing money and putting money into the system hand over fist, is that eventually it causes inflation. And inflation is the ultimate disruption because it makes it really, really hard, for businesses to even plan. So we really, really have to look carefully at these inflation numbers to see if there's any evidence of it. We'll go over that next week. Well, before we get to more about the coming week, let's quickly talk about last week. There was that presidential election, of course, and Pfizer got FDA approval for a rheumatoid arthritis drug. Now, this is big, emblematic of the fact that Pfizer has a really good pipeline now, and also, obviously, it sets up a hair-pulling fight between Pfizer on the one hand and Abbott. Now, speaking of cholesterol, obviously Pfizer has made billions on combating this stuff. Amgen released a study that showed good effects of one of their drugs on bad cholesterol for patients taking another statin. That's probably good news for them. And while we're on the subject of cholesterol, but bad news, let's talk McDonald's, because they reported negative same-store sales for the first time pretty much since the earth cooled, about a decade. Now that shows a weak consumer, it shows weak international sales, and obviously it shows that McDonald's that's lost its footing a little bit. That is pretty atypical. They really thought that an economic recovery was coming and turn their menu a little bit too much to high-priced items. Start to see them adjust, and pretty quickly on that. Now, Avena had a good week, Vivus had a bad week, but they were linked both by this worry over obesity pill problems going forward. Now, in the coming week, we have on Tuesday, Calgene has a web conference on rheumatology. If something comes of that, we'll be talking about that next week. And on the earnings front all week, well, we have Home Depot, which might give you a sense of how the building business is doing. But do remember that they've been taking business from Lowe's, so this isn't only a cyclical report. It's evidence of sort of McDonald's Burger King thing between the two of them. We also have Dell and Cisco. Now, healthcare and technology have been strong sectors. However, here's the deal. Of course, PCs are really killing Dell, and Cisco is hurting both from PCs and do remember also government spending. Cisco gets a lot of government contract business. That is often overlooked. And in terms of retail, we're going to get those retail sales numbers. We're also going to get reports from companies like Gap, which has of late, finally, mercifully, been showing signs of a bit of a turnaround. Target too will report. They've been doing pretty well all along. Now, if not reporting, companies are going to be talking to analysts from Quest to Gilead to who else do we have? P&G and Boeing. So it's going to be a really, really busy week. But our eyes have to be set on those inflation numbers. Those are big macro numbers, and we're going to be talking about that unless they show no evidence of anything, and even then we'll be talking about them, but we won't be forgetting about these inflation numbers. They are the biggest sort of so far unrealized worry in our economy today, and it's something very few are talking about. Anyhow, if you disagree with me on any of this, and you surely won't, but if you happen to, feel free to tweet me. My Twitter handle is below. Also, feel free to tweet me any other questions. And most of all, have a happy, healthy, and profitable week.